I do want to talk about consumer confidence, break this data for you. Consumer confidence falling for the fifth straight month in April to 86. Economists were expecting 88 here. Interesting to see the present situation number coming in at 133.5. That's just a touch below the prior number. Expectations coming in at 54.4. The previous number was 65.2. So a significant move to the downside on those expectations. Joining us in studio to break it down, we got Yelena Shulyatyeva. She is the Conference Board's senior U.S. economist. Yelena, great to speak with you here. What is your headline takeaway from this report?
Well, expectations are at a 13-year low. And if you look at what consumers are telling us about jobs availability, they expect that to be really, really poor. So that index is actually at its highest level since the Great Recession, the index that tells us that consumers expect fewer jobs available. So this is telling us, this is getting to the consumer. They were surprised by the tariffs. Remember, this survey was taken right at the at the high peak of uncertainty during the Liberation Day. That is included in the sample. So I think consumers were very much surprised by the severity of those tariffs. Yeah. And they are actually expecting to affect their finances and their jobs.
So I want to pull out a jarring stat from this print that I know you'll be aware of. The share of consumers expecting fewer jobs in the next 6 months, 32.1%, nearly as high as in April 2009 in the middle of the Great Recession.
Totally. So that is a scaring thing. And they are very much concerned about their personal finances as well. So I think the JOLTS data that you cited earlier, that is an interesting one as well, because the job openings rate fell to 4.3%. 4.5% is kind of the borderline between, significant increases in the unemployment rate and small increases in the unemployment rate. When it falls below 4.5%, this is significant. We should probably expect much more significant increases in the unemployment rate.
And yet you have stocks rallying at the moment. To what extent do you think that the narrative about consumer resilience over the last 4 years is perhaps being taken for granted right now by consumers? Do you think, or by investors, do you think that that consumer resilience is going to continue despite the soft data?
I think, exactly. The soft data and the hard data. When the hard data starts falling, that's when we're probably going to see something.
Well, the data on the last consumer confidence is about 12-year low, and it does indicate that we may be heading into a recession. At what level would you say we're out of that recessionary potential?
Usually expectations below 80 level is indicative of a recession. We are way below that for a few months now. So, but it doesn't mean we're in a recession now. So, there's been some disconnect between confidence sentiment indicators and the reality. But I think we are going to start to see some follow through in the hard data. The one to watch is obviously this Friday, and I think we're going to probably see a weak number as well.
Even this early, given that the tariff policy just went into place, perhaps maybe it takes more time. No, you think we'll see it immediately?
I think we're going to see a freeze in terms of hiring, maybe not layoffs just yet, but hiring freezes will impact the number, and perhaps some layoffs in the industries that are more susceptible to these trade shocks, such as trade and transportation and other things like that.
Yeah, what are you watching to determine when that labor market data will really roll over and be indicative of some pain?
Unemployment rate and the details beneath that unemployment rate, so flows into unemployment from different sectors, layoffs into, jobs into unemployment, out of labor force into unemployment. If that starts rising, that's going to be a really tricky situation.
As far as the government is concerned, we've seen quite a few layoffs for the past couple of months, and how is that going to have an effect? And when is that going to have an effect on the jobs report? Because the jobs report, obviously, huge lag effect on that with birth death statistics. But how soon will that show up in the data?
We could see that this month, in this coming report. The big worry for the economy as a whole from that statistic is that it's not just government workers, it's the contractors. And the relation here is, you are going to see that pass through into contractors at a rate of 2.5, 2.6 jobs per one government layoff. So that's a pass through. Another thing is state and local government workers. Are we going to see a slowdown in that sector? Most likely, because we ran out of the pandemic funds for them to hire people. Mm-hmm. And the private sector, I think, will see a significant slowdown in leisure and hospitality, for example, because consumers are pulling back from this discretionary spending on services in the time of significant uncertainty. So that is where we see we're going to see some pass-through, I think.
Yeah, Neil Zeta has been flagging that state and local government slowdown as something that is a significant risk for some time, Yelena. So thank you so much for bringing that up and for giving us great context on the data. Appreciate it as always.